Now, sort of mixed signals from the Wall Street. If you look at S&P 500, that rose modestly overnight, extending a strong start to the week that pushed the benchmark into the green for the year itself. Now, the broad market index inched up about 0.1% to close at 5,892, while the nasdaq composite gained 0.7%. In fact, it was also the sixth straight winning day for the tech-heavy index. Now, the Dow Jones Industrial Average, on the other hand, continued to stay in the red territory, falling about 90 points at close. My bad. Technology stocks, on the other hand, were the one that climbed. Shares of Nvidia advanced more than 4%. Tech giants are putting up a strong show for the week to date, as well. Nvidia and Tesla are both up about 16%, whereas Meta Platforms has added 11% during this period. Now, Amazon and Alphabet, on the other hand, both are up more than 8% each. Now, week to date, the S&P 500 and Dow are up more than 4% and nearly 2% respectively. The Nasdaq, on the other hand, has jumped more than 6%. Now, this week's gains also put the spotlight on S&P 500, which is now in the positive territory for the year. Now, at one point, the S&P 500 was more than 20% below its record high set in February. But since hitting that April 7th intraday low, the benchmark is now up more than 21%. Now, risk appetite grew this week after the US and China temporarily slashed tariffs on a wide array of goods. The US reduced duties on China to 30% earlier this week, while Beijing lowered its own levies to 10% on US imports. Now, both nations had threatened in April to impose those tariffs above the 100% mark. But other than that, what are you picking up on the crude front?
On the commodities front, crude oil price eased overnight, giving back some of the gains from earlier this week. Brent crude settled around $66 per barrel, while WTI closed near $62, both down roughly 1% from the previous session. The pullback came after US crude inventories unexpectedly rose 3.5 million barrels last week, signaling potential oversupply concerns. The market is also digesting OPEC's latest monthly report, which trimmed its forecast for non-OPEC supply growth in 2025 to 8 lakhs barrel per day, down from previous estimate of 9. This revision reflects reduced capital spending and slowdown in US shale output. Despite these factors, oil prices remain near 2-week highs. But we'll discuss OPEC in detail later. But gold prices also dropped. Rising trade optimism boosted risk appetite, leading investors to shift away from bullion. Spot gold slipped to its lowest since April 11, shedding over 2% to $3,188 an ounce. Bullion fell as low as $3,174 earlier in the session. Despite this downtrend, remember, gold has scaled to a record high of $3,500 last month, as prices are up 21.6% so far this year.
If you like this video, then like, share and subscribe to ET Now.